people are doing wrong investments. The biggest or the easiest way to lose money is fixed deposit.
How you decide when a stock should be exited?
So I'll say on the long run, I'm bullish on the gold, and there's a reason behind it. But obviously, Chandan, anything which has gone up like a hockey stick has to come down.
To manage the risk. And when you say risk, what is risk? Risk of losing capital, risk of not making money, or what is risk in your opinion?
Mistakes are important. In fact, the most mistakes are done by Elon Musk.
I've heard a lot of time that market is more about psychology. Why people say that? So, Bhuvan Gupta from Client First Capital. First of all, thank you for coming on this podcast. We have very high expectations, I believe, for myself and for the people who are viewing. So it will be a mixed kind of conversation between Hindi and English. So feel free to add your inputs where I felt I haven't asked any relevant questions. But let's go ahead. Before we start, I would like to know about you. Who is Bhuvan Gupta? And let us know about your professional and personal journey in like few lines.
So Chandan, thank you for inviting. Let me first of all humbly accept that I am no expert. I'm a practitioner. I'm full of a lot of mistakes, and the reason I am doing this is that people understand that how equities are not high risk, high return, because that is gambling, and also people understand that the one of the best way to retire rich is the equities. Coming to my introduction, I'm from a middle class family, started my career in the banking roughly 20 years ago. And I saw a lot of wealth in the banking and grew up to the rank. And then I realized that the clients are the real wealth. A person who listens to you, like a joint family concept. So a big joint family, a client first capital family is what is my heritage and my legacy. And then I started this company called Client First Capital. And I have given a lot of tuition fee to reach here. And then in 2020, I became a full-time fund manager. And from there today, I think I'm in front of you. I still believe that in my field, there's a lot of scope. People are very greedy sometimes and they're very fearful sometimes. And if you control this behavior well, there is a midway, which is growing at 10 to 20% kind of a CAGR. And we are treading that path. So that's all about me.
So when I talk about, I understood you're a fund manager. It's been years you are into this. But if I try to understand, what is the overall Client First Capital mission and vision that they want to do it for their clients or for the partners that are with you?
So this is saying that in a typical growing economy, out of every 4%, 3 people are a banker.
Okay.
And I have been an ex-banker and I call them Bhayankar now. So with due respect to them, many of them are doing a great job as well. But the challenge here is, Chandan, when the incentives are not aligned, even if you want to do a good job, you will not be doing it. So if my targets are monthly and you are only going to make money in a year or two, then the mistakes will happen. So Buffett and Munger talked about the alignment of the incentive. Show me the incentive and you will get that delivered. So there was a gap in the market, and this company called Client First Capital is for the client, by the client. So we believe that they are stakeholders. So there was a gap in the market, and that's why we started the journey. And we are a transparent company which follows the highest ethics, lowest risk. And I think we are very open to the questioning of each and every module of the business.
Okay. That's good. So I understood the Client First Capital mission. I mean, the values that you mentioned.
Yes. So that's what I think you mentioned to me. So the core purpose in the market is twofold. One is that people are doing wrong investments.
Okay.
On their own. So we want to save them against them. The second challenge is to save them against the wrong advice.
Okay.
So these are two problems in the financial market. And the reason is, I have now 20 years in the industry and I have seen a lot of mistakes committed by people by not even knowing what they're doing. Mm-hmm. People invest or trade first, and if you ask them even a company's CEO's name, where they have invested, or a price to earning, they don't have no idea. So I think a financial doctor is very important in this part of the world.
Okay. So you mentioned that there are two kind of mistakes that people are making, or I would say investors are making, is that wrong investment. So how an investment could be wrong? Can you just a little bit give me an example just to understand?
So from the ages we are attached to money, we think money is ours. But if that is the case, will we take with money with us? We can't. So it is we are all the custodian of the wealth which we inherit from our forefathers. Now you may say I'm a self-made person, but I am sorry to say that if we have become something, it is the blessings and the help of many people around us. It could be a family member, it could be a supplier, it could be many stakeholders, it could be government. Like Buffett says that I'm lucky that I am born in America. And capitalism is where America has become the biggest economy today. So, Chandan, the most important thing here is to understand that when I'm attached to money, I would not like to see 100 going to 99.
Okay.
I think we were discussing, and this happens with all of us. And that concept in the behavior finance is called loss aversion.
Okay.
So when you are loss averse, the big companies or the so-called brokers, they play with your behavior and offer a product in the market, which is telling you, let's say hypothetically, or let's say not telling the full story, that you will not lose more than 3 or 4% of your capital, but you will make a 10% upside.
Okay.
Or let's say somebody give you guaranteed return more than the fixed deposit, which practically doesn't exist.
Okay.
So what's the fixed deposit rate
Would be 7% as per
in India?
Yep.
And what is the fixed deposit rate here?
I think it's currently 4.5 or 4%.
India also is now 6.
Okay.
Now 4 and 6 we get because banks make more than that. One. The second, the inflation is equivalent to that, or if you look at the real inflation, it is higher than that, which means the biggest or the easiest way to lose money is fixed deposit. I would be, a lot of people will be hating me for saying so, but the easiest way to lose money is against the fixed deposit because of the inflation.
So basically, what you are saying is that even we are depositing in the bank, our money may be safe, but eventually we are losing value in the long run. But client first capital helps the client by investing in trying to generate more returns, I would say, on the capital with less risk and going forward, like creating more value and wealth.
So then, from the ages, businesses have made money. You work for a business. This podcast company is a business. This mic belongs to a company. They are selling a product. So indirectly, we're helping YouTube also to grow their audience. So we all work for business. We're happy to subscribe or watch something on the YouTube. We're happy to have a Starbucks coffee. We're happy to have an Apple phone or a branded watch or a very good car. But when it comes to become partner of that business, we don't think like that.
Okay.
And that's a slight difference. So the whole world is controlled by merely 5 to 6% of the people. The capital market, which we call share market, gives you a way to become partner of those companies. And then every time you buy a new car or an Apple iPhone, as a shareholder, I am happy because I get very small, tiny fraction of that profit. And if you compound that over a period, that becomes a huge money. So the whole world is going through a phase where everybody would like to have instant gratification. And it is accelerated over a 5-year or 10-year period. Now people are making reel of 30 seconds, 20 seconds, right?
Okay.
So I think if you go reverse, and by the way, you can't, some of the things you can't achieve in less than 9 months. You know what I'm trying to say.
Yeah.
So anybody who can have a time span of reading 10 pages a day or watch half an hour of a podcast and write down, they will have an edge. But unfortunately, this is not part of the curriculum.
Okay.
Forefathers or there is nothing called an MBA investments or MBA value investing. Or leave this also. On a dining table, how many family members sit down and discuss investments? They don't. In fact, in the Banya,
In fact,
yeah.
in fact, in my family, we have never discussed. All my parents used to say is, I mean, they best to the best of their ability, and they have done it well. So were telling me that bank is the safest, so you should save first in the bank. But eventually, while working, I realized that I'm also losing money with the compared to the inflation. And I mean, sorry, I cut you down, but one question on wrong investment again. Let's talk about the current scenario. We know that gold dropped down today, I think by 15% in the morning. But you mentioned wrong investment. Gold, people say, people consider as a safe investment nowadays. And even if you have invested, let's say, yesterday, and today it fell 15%, would you still say it's a wrong investment?
No, I'd never said that gold is a wrong investment. And if the price has fallen yesterday, it's good.
Okay.
Anything which has gone up 3 times, if it has fallen 15%, how much have you lost? Nothing. So if you invested yesterday, as I told you, people are loss averse. They will be right now. I don't know what they will be doing at home. So my wife still owns gold, and I don't think so. I haven't even told her once that why did you sell yesterday or day before yesterday, where I have exited partially on the gold, but not on the gold mining. So I'll say on the long run, I'm bullish on the gold. And there's a reason behind it. But obviously, Chandan, anything which has gone up like a hockey stick has to come down.
Okay.
Yeah.
So that will be fast.
So there is no judgment right now. It's an observation. Now, you would have lost more money if you would have leveraged on the gold. So the reason why it is now, see, nowadays upside and downsides are huge and they're quick. Why? Because of the leverage available. People get into it. Today, everybody wants to make quick money, trend investing, right? Like meme stocks, GameStop. So what happens is when intrinsic value of gold, let's say, might be $3,000. But what happens is people will keep buying it because now, did you see gold? Oh, did you see gold? Now everybody will talk about it on the home. And this media houses will, and even the podcasters will just talk about gold. The common man think, oh, I don't have gold. Oh, I have the money. Why I'm not buying it? And then they will buy. And then they will be in the fag end of the cycle. And then they might also sell tomorrow on Monday.
True.
So I won't sell on Monday. I am not scared. One should not. But how will you know about it? We have to read the history.
Okay. So basically you're saying is that then I'm not clear, very honestly, is that if gold, for me, what is my understanding is I could have invested at 15% lower price where I've invested, let's say, at 100. And for me, it's a wrong investment. I mean, because I made the decision at the wrong time where I could have made one day later, I would have saved 15% of my capital, which I'm losing as of now. Virtually losing, not till that I have not booked. So I'm still not clear how this is not a wrong investment and how a fund manager can play a role in this, saving our money.
So Chandan, it's not necessary that every time we'll get lucky. That a fund manager has a magic wand that he knows when to sell, when to buy. But with the 80% probability, he knows. So what happens? First of all, we're judging too fast. So let's say somebody get married to a husband who works in Gulf, and it's a great investment for her because that man makes good money and it'll be good life. And the moment she got married to him, after a year, he lost the job. And unfortunately, he has to go back to India with her in a village. And this has happened in 2008 and 2002. So there's nothing hypothetical about it. Now, will you call that lady that, or the family that it's a wrong investment you have made? Your son-in-law, is a stupid guy. That's not how you look at the investments.
Okay.
You need to still understand that will the gold go up? Why will it go up? What are the factors influencing it? And what's my time horizon? And there are a lot of stimuli, but I don't want to go overboard. All I'm trying to tell you is that what's your investment horizon, Chandan? The first thing we need to know in equities, in commodities, you should have a 10-year horizon. Buffett is shouting, screaming, don't come in the equity market if you do not have a 10-year horizon.
Okay.
Think about it.
Okay. Makes sense. Okay. I understood about you, about your company, Client First Capital. So you are a fund manager, and I understand there are different way of investing. What in methodology or what approach do you follow, or maybe a client first capital follows, which helps in creating wealth for the clients or the investors?
So I've told this earlier also. We borrowed this philosophy of investing is a 3 lakh tool, and from Chacha Kakre as a value investor managing more than 20 billion now, I believe, and he operates from a village. So the first leg for me is quality.
Okay.
Quality demands a premium. I think we all understand this now.
Yep.
Like simple example, you can't compromise with your belt or your shoe. They have to be good quality. And slowly you will realize that everything what I'm using, right from the badminton court to the shuttlecock we use, everything demands quality.
Okay.
And yeah,
One question, sorry. When you said quality, so you are talking about the quality of the product. My understanding was the quality of the company in terms of financial. A product which is, let's say, a mediocre product, not mediocre quality product, is doing fantastically financially. Would you not call it as a quality company?
no. Any product you launch and by fluke that becomes great is one-time success.
Okay.
By the way, what is a company? A company is made, or it's a collective people come together under the one or two visionaries, like Infosys, under the patronage of Narayan Murthy, and that's those 7 people who joined him in the early age. Or let's say Wipro, Ajim Premji is that visionary. Or let's say the Reliance, Dhirubhai Ambani is that visionary. And then there is a family, a lot of these great managers, leaders who came under the same family head, and they're running the country today. Same thing can be talked about Tesla. We see Elon Musk, but there's a whole group heads of different departments. They collaborate well. So this is how a company is a culture.
Okay.
The company is a culture. Culture focuses on the process, and then they see what markets need or what market may buy or may like, and then they create the product, and then they create the iteration of the product. Like Apple came with an iPod. Today iPod is not there.
Yeah, it's no longer exists.
But iPod changed the whole thing from the Walkman. So we used to have Sony Walkman. I don't know whether you had, no, I had
Yeah.
it. And then we had the iPod, and it was a small thing, and and today the younger generation will never even know about iPod. But today Apple's iPhone is more famous. And that becomes a talking town thing because it is an iPod itself, it is a computer itself, it has a lot of things. People, in fact, now only use phones.
For the camera as well as like.
Yes, when the camera is gone, so even the Kodak has gone inside. So
Yeah.
the whole point is that how this is happening and why it is happening again and again. The values and the culture is the most important.
Okay.
So let's say you have a great strategy, like you talked about one product, and by fluke I get famous. But there is a saying that in a bad company, culture eats the strategy over breakfast.
Okay.
Okay. So culture is what we have to see. Now, when I said about the quality, coming to value investing, you can look at quality from any angle you like. You can start with the product. Like if I be having a coffee, how's the coffee? How is it presented? You can look at the quality of service. You can look at the quality of material they're using. You can look at the quality of people they're hiring. You can look at the quality of the place they have taken. Or you can approach the same from a financial perspective also. So people who are marketing expert, they can look at quality from different angle, the quality of ad this company is, what this company is trying to project. So quality can be looked at lot of angles. We look at from the financial angle,
Okay.
but it gets supplemented by all this I mentioned.
Okay.
So you have to have a consumer view of a business. So from a consumer perspective, am I happy with Apple? How Apple is different. So one parameter we can say that Apple has less incident of hacking. The system is more protected.
True.
Okay. If you look at the Apple, it's a very small business of Apple, but you talk about this. The Apple has some movies. Generally, if you look at Apple movies, they're all high rated. They're 7 or 8 rating plus.
Okay.
So Apple is not in the business of like Netflix, let the content come, let the content come. No, Apple will be in the business of having only quality content. You should look into it. Then we come to the second leg, which is the growth. If a person or a company is very quality conscious, but they are not growth hungry, we will not make money.
So that's another angle that you look into it.
Very important. In fact, there are a lot of quality business in the world, but they don't want to grow.
But how would you evaluate that they don't want to grow?
Okay, it's very simple. So,
As an example, I
yeah.
just like my audience would like to understand this. I think
So it's very simple. Philly Cafe. This history of Philly Cafe, it was of one small shop in Mamzar behind the in the parking till at midnight 2 a.m. people will flock in there and they will consume Philly Cafe Zafran tea. Very simple Zafran tea concept. Today, Philly Cafe is roughly 100 plus outlet in my knowledge. Now, if Philly would have been that small there, you go there and have a tea. Somebody went to Philly or would have gone to Philly many times, many people, and Philly would have said no. Mr. Raha Philly said, no, I would not expand. I'll not expand. Or probably father would have not expanded. And then Raha Philly one day realized that if I have to go further, I think I should take this opportunity and expand. Now, as an investor or consumer, you want to be part of Philly Cafe or you want to start your own Philly Cafe. You can't start because he has a trademark.
correct.
You cannot partner because the father is not ready. How will you make your money? That's one part. The second part, how the world will know what Philly has to offer. Zafran tea, let's give a credit to the Philly Cafe. And they launched this in the world, at least to Dubai.
Okay.
Kunafa chocolate. Now, I don't know who has started it, but all I'm trying to say is that if there is no growth, how will we be part of it? So, the difference between Apple and a small business which is equally producing quality phone is that Apple is open to the shareholders to come and make their wealth through the Apple's growth. That small business could be making better phone than Apple, but it is not available for the outsiders. And there are many of them, by the way. The third leg, Chandan, is the pricing.
Pricing.
Yeah, the valuation.
So when you say pricing of the company or the stock.
So remember, you love the company, you find the company great, but where will you make your money? In the stock.
Of course.
So there are two. The soul is the company, the body is the stock. You
Okay.
can't invest at the book value. You're a finance expert. You have to invest at the market value. That premium will continue to be there or will become higher if the growth is extraordinary.
Okay.
So these three all are important in the value investing 2.0.
Okay. So I think in nutshell, there are three elements. The first is quality, then is the growth, and then is the pricing, the right pricing we are in.
The valuation. So
The
you have to
valuation.
pay fairly or less for a wonderful business growing at a good pace.
So that's your, that I would not say your, that's client
That's-
first capital forte.
That should be everybody's forte. If
Okay.
that is what you don't do, you may enter in a room because of the narrative of a company, but you will not stay in the room because you have not looked at the financials. You will go bankrupt.
So any investor who is looking to invest, at least these points they should consider before
Absolutely.
investing.
Absolutely.
That's very good. So another thing is, as you have already explained, one of my question, why is investing important to make wealth and create wealth, beating the inflation and everything. So there is a myth. Even I have that question. Some people say that you should have started investing at the age of 22 or 24. Some start at 30. So what is the right age? Is there anything called late or early or what? What is your view on that?
See, there is no age of late and early because let's not have a regret. But the right age to start at 7, not 20.
7. Bhuvan, how is it possible? Like, for example, I'm not earning on that
Okay.
point.
7 is actually also, I will say, more. It should be even earlier.
Okay.
There are three things in life: savings,
True.
investing, and spending. When a child learns spending, child learns spending at the age of
I think 2 or 3.
4.
Yes.
My nephew did not know the value of 100 rupees. He knew the value of 10 rupees. When the relatives come to your house, they'll give 10 rupees or 100 rupees to the children. We have this Indian custom. He knows he has to eat chips. He will take the 10 rupee from or 100 rupees. He'll give it back to me or my brother or my father, and take 10 rupees in exchange. What a loss, huh? And he'll go and buy chips. He was so addicted to chips, he had to go through root canal that early age.
Okay.
Now that's one example. The second example is our dear Netflix.
Okay.
My daughter told me when we shifted the house, he said, Papa, that house, because we're waiting for the internet is not there. Either you drop me back to my friends or get me Netflix.
Okay.
I gave her Netflix from my mobile because the Wi-Fi is yet to come. She consumed 6 GB
Oh my God.
in 1.5 day. And today also tell me, Papa, I invest in Netflix because all my friends
Watching
love Netflix.
Even I love Netflix.
You also. So now you are spending money on Netflix. You're spending time on Netflix. Money is small. They say today, right? If a movie is bad, I don't go and see. Why? It's not about the money. It's about the time of $1,000 per hour I'm giving to the theater. So the point here is when your child is learning spending so soon, ice cream, chocolate, toffees, same concept. And then you tell one day and you go with a piggyback concept, which a lot of companies promote, the insurance companies promote. This is the saving pot. Bring it home. Then we get that saving pot. We also had it. And we tell our children to save money. So whatever money you get, save inside. Now that's another flawed concept. But again, we are taught in the early age because that is how the whole saving culture of Asia is built. Now, when will you learn investing? When in your neural network, because you learn up to the age of 13 or 14, and then you just do those things again and again. Let's accept that you make friends, those friends at the age of 8, till the age of 18, and after that, all are colleague at convenience. So this is the time to learn, and this goes into neural network. What? Spending and saving. Where is investing? It's not
There is
there.
no investing group.
So when I started investing and my father become our investor, he said, stock market is gambling. My father said it. Okay.
Okay.
Today also he believes in fixed deposit. My wife believes in gold. My relatives might believe in properties. Now some of them are doing great because they know how to play that game. Having said that, if we would have been taught inflation on that early age, and the power of labor, like Robert Kiyosaki talks about fix versus incentive. And that book which he wrote, I think the one book which I loved the most to start to understand the how the world works is the Rich Dad Poor Dad.
Poor dad, yeah.
So I think the power of investing should be taught first.
Okay.
Now today, my children are investor in the share market.
Oh, nice.
Now when their money grows, they have this greed in them that I want to grow it more. I want to grow it more. So it's very important that on the dining table, we start talking about it at an early age. When a child can understand that what is happening on the Netflix, which I think a lot of things are not for them. Why he can't learn investing? Is it so, difficult? Is it so complex? It is not.
Okay. So I think what you're trying to say is that, in short, is that everyone should be taught about investing as soon as possible, and it is essential as well.
Chandan, if we'll not learn this, in fact, this is a generation, our salaries or our incomes have gone 100x, 1000x actually. But if we would have grown at 5%, the cities like Dubai, Singapore are uninhabitable. The inflation is not 5 or 6%. It is 10, 11%. So if we will, in fact, a lot of businesses we talk to, the old factory is depreciated. But the cost of making the new factory is more than the net worth of the company.
Oof. Okay.
That kind of cost or inflation has gripped world. So it's very important. See, earlier days, parents used to make 100 rupees or 100 dirham and they used to save 60, 70. Today you make $1 million a month and you have $5 million worth of watch which people wear. So I think today we have to understand that the investing is the essential most component should be inbuilt in the every family's culture.
Okay. Fair enough. So one more question. Like I am also into markets from last 6-7 years, but I mean, I'll come to that question later. But the question is, there's fundamentals. What you follow is the fundamentals, which three legs you mentioned of investing that you follow. So this is called also technicals. So do you also follow technicals? Like people who follow charts, the moving averages, RSI. So you also, I mean, follow, or a person should follow that investor. I mean, it can help in investing or not, or it's meant for trading, or it's meant for speculation. What are your opinion on that?
They all can, but anything which is very easy. So investing is simple, not simpler, not easier. Anything which anybody can understand. You go to ChatGPT and just put RSI and all, you'll get to know should buy or sell. But tell me one thing, why are we investing in the equity market? Are we here for percentage return or for X?
If you ask me, for me, what matters is the percentage. Correct?
That's the problem. So when we say that a stock has become 1,000%, it has grown 1,000% in my portfolio, it's a big number. Brain is not able to take it. Oh, 1,000% is big number. People generally sell at 10, 15, 20, 30% because they have learned that only in their life. 15, 20% is a great return because you're comparing with the fixed deposits. You're comparing with the bond returns.
True.
All right?
True.
The right education is, please don't come to the stock market for percentage return.
Okay.
Any idea what Apple would have done for people in the last 40 years? No. Apple has made 3,500 times, not percentage.
Oh,
Can you tell me how much business percentage?
should be around 3,50,000.
Right? And that's see, you took time to say that. Brain will not accept it. When I say 10x, 20x, 30x is easy.
It's easy, yes.
But 30x is on $100,000 is $3 million.
Oh my.
People can retire.
Okay.
So what game we are playing? If you're playing a game of tactical buying or selling, then the technical works. But I want to make my life around that if I take a decision, I should be taking a next decision after 5-6 years or probably 10 years. So when the cultures last, they don't see. I understand people will say that every 10 year the top 10 companies change. Correct. But not necessary that the same company which is there in the last 10 year is not part of the new 10x or the new 10 companies, because the great companies also get acquired. Gillette, today's P&G. Obviously, not every company which is get acquired still continue to do 20x or 20% return every year. So what we need to understand here, which is very important, that I'm in a game of 10x to 100x. Fundamental is that game.
Okay.
Buffett made his first billion at 65 of his age.
Oh, it's 65
of his age. It's a slow, guaranteed way. Today, his net worth at 95 is $160 billion.
Amazing.
Okay. How many decisions he take in his whole life to make this 165 billion? Only 12 correct decisions. I don't want to sit in front of system. I want to have my time, because money, the only thing money gives me is freedom of time. Buffett calendar is empty. Here people are running. Why are we running? Because we take decisions every day. Let's take some decisions and they should be changing our life.
So less decision, quality decision.
Absolutely, because the number of decisions you take, you will also commit mistake. So the quantum is not bigger. For example, we reach here $100 million. How many decisions we have taken correct? 4.
Oh, nice.
4 companies have brought half of the wealth we created.
So basically, more decisions, more chances of making more mistakes.
Yeah.
Correct.
Yes.
So better to have less decisions but quality decisions. So
yes,
make less
and the bigger decisions.
And the bigger decisions, which makes sense. Okay. I understand you have, as you mentioned earlier, that you borrowed these concepts from one of the...
Everything I have is borrowed. Nothing is of my own. Even this life, I think we all should understand that everything is borrowed. Coffee has water. Coffee itself has the coffee plant. The voice we have is borrowed. The breath we take, borrowed. Similarly, all the knowledge which we are getting or the wisdom we are getting is all borrowed.
Okay. Would you like to mention some mentors which our viewers can learn from?
So I think everybody should have a mentor. I think that is the biggest challenge.
Should have a mentor, should have mentors, because you can learn from everyone and everyone. What do you? This is my belief.
So that's correct. But one person has to be there who should be able to say something to you. When you have a lot of mentors, it is like you are having podcasters who are bigger than you and listening to them relax in a relaxed manner. No, that's not the mentoring I'm talking about. I'm talking about somebody you love a lot, love to learn from him, but do not like to be with him and still want to be with him.
Okay.
Is the mentor. Actually, in the Hindu philosophy, it is called Guru. Now, Guru is for life, mentor is for business, mentor is for career growth. We all egoistic people. Unless we surrender to somebody who has some higher capability than us, it is difficult.
Okay.
It is very difficult. So, mentors are must.
So, any names you would like?
I have many. So, my father and mother, they are the first mentors. Then I have my guru, Ma Purnana Saraswati, who is a part of Chinmaya Mission. She taught me Bhagavad Gita. I think the most important thing happened to my life is to understand that virtues are the wealth. This money, car, houses, these are not wealth. The virtues are able to drive the wealth. In my very humble analogy, the richest people in this world, where the money follows them, apart from these billionaires, are the Babas, gurus.
Okay.
Right? Sadhguru, 165 days, you will find him in America. He's riding that bicycle, sports bicycle. Very good health. People run after him to listen to him. He's also having a soil movement. He's doing a great job. Does he not have money?
He does.
The trust must be $1 billion trust. And there are many gurus
So it's
like him.
important to have mentors and right mentors.
Absolutely.
And any financial mentors you would like to, investor mentors, I would
So
say.
it depends on the which field. So if you talk about the value investing field, I have Philip Fisher, I have Peter Lynch as my first investment guru. If you come to our office, you will see those names. Then Warren Buffett, and then Ramdev Agrawal to start with. So he's a humble man I met. I had a fortune to meet him, and that has changed. That to be a billionaire or to follow their path, you don't need to be a cunning or shrewd person, because that's not my nature is.
So at least they can start following them, their ideologies and their methodologies.
I will say don't follow them, practice them. You can't become Ramdev Agrawal, you can't become Warren Buffett.
Okay.
You will become better Chandan, better Bhuvan.
Okay.
So it is that adopt, not adapt. So whatever you can. So I have gold mining stocks in my portfolio, but Buffett doesn't have.
Okay.
Right. So people are like, oh, how come you're a Buffett follower? I'm not a Buffett follower. My guru used to say, don't follow anything, because then you'll become a herd.